Welcome back to 4 Wheel Finance. In this video, I'll be breaking down how much you need to make in order to afford a 2023 Genesis G70. You should really consider following one of these rules in order to avoid making a huge car buying mistake that will set you up for years to come. I've also included a link to a free auto quote where you could save up to $600 a year in the description below, but more on that later. There are 4 options I'll be going over today. You can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation, something cheap, taken from point A to point B. Some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around to the end of the video to find out what method would be best for your situation. This is 4 Wheel Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles that you would like to see. First rule is the 24-10 rule, and this states that you should put at least 20% down on the car. You shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Genesis G70 has an MSRP of about $40,000, you would need to put down $7,800. And with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $705.22. Take note that you're also paying about $2,500 in interest. Bank rate states that the average monthly insurance cost is $148 a month, but this varies a ton from person to person. Where you live, how old you are, your driving habits, your driving history. So use that smart financial link I've got in the description down below to find out exactly how much it would cost for you to insure something like this, or if you want to see about dropping your own personal insurance on your current vehicle. It takes like 20-30 seconds to fill out. This brings your monthly total to $853.22. Going back to that 24-10 rule, this would mean you'd need a monthly gross income of $8,500, which would add up to about $102,000 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $5,000, maybe $10,000 car in cash and put what would be your car payment of $705.22 in the market instead, over the course of 5 years with a conservative 6% rate of return, this would turn into about $49,241, gaining almost $7,000 in interest. Take a look at those Acorn and M1 Finance links I've got in the description below. It's really easy to get started investing, and I encourage you to get started as early as you can. And this is just for the first 5 years. If you were to continue this for 10 years, it would amount to about $115,137, again, just at that 6% rate of return, which is pretty dang conservative. For reference, the stock market averages around 10% return per year. The next rule here is my own, and for my rule, I think you'd have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out both your Roth IRA and ideally your HSA if you have one. And I know that this seems like quite a lot of saving and investing, but I don't give you any monthly percentage rule that you have to stick to in terms of spending. So it's up to you to decide if you want to spend more of your monthly income on a vehicle, or if you'd rather spend less, go out to eat more, on more vacations, more car parts, buy a more expensive vehicle in the first place. Once you have that saving and investing portion, I'm not going to tell you how to spend the rest. The 6-month emergency fund just ensures that you're covered in the case that an emergency happens. The investment portion gives you a little bit of financial security later in life when you're probably going to need it the most. The majority of people say, well, nothing's guaranteed. And that's true, nothing's guaranteed, but on average, people live to about 78 years old, and so you're probably going to need that money in the future. Your future self will thank you for starting now. Next rule I'll be going over here is the Dave Ramsey rule, and he thinks you should have a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your gross annual income, and you should purchase it in cash. Given that the 2023 Genesis G70 starts at about $40,000, you'd need an annual gross income of $78,300, or twice that. Ideally, it's nice to buy a vehicle in cash, as you would avoid having to pay that $2,500 in interest, and your insurance would be lower, but not everyone has $40,000 in cash that they can put towards a car, obviously. The final rule I'll be going over is the 1/10 rule, which is developed by Financial Samurai. Personally, one I think that the majority of people should follow, especially if they're trying to build their wealth as quick as they can. It really doesn't allow you to buy a new vehicle, but it's set up to help you spend responsibly, which reduces your financial car ownership stress and increases your net worth a little bit faster over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a car. It can be new or old, but obviously for the vast majority of people, it's probably going to be used, and you must own it for at least 5 years, but ideally more. And the theory behind this here is to help minimize your financial stress. Frees up a little bit of money to invest in assets or opportunities that may come your way, things that'll go up in value. It's much more stressful and difficult making life decisions when you're worried about payments each and every month. Once again, this is 4 Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them down there in the comments below. And don't forget to give a look at that Smart Financial link. You can save up to $600 a year on your own car insurance. It takes like 20-30 seconds to fill out, and it's completely